Now I'll be preparing you for the game which we are about to play. So what we will be doing is we'll split you into 4 different teams. You'll be going to 4 different rooms. You'll give, each team will be given a sum of 10 lakh rupees. Okay, 10 lakh rupees. Listen to these instructions very carefully because these would come in handy when you are discussing amongst yourselves. 10 lakh rupees, there will be 10 rounds. Okay, each round you will be given additional 10 lakh rupees. So how much would be the investment over a period of 10 rounds? Each round is 1 year. Say each round is 1 year. So how much would be you be investing over a period of 10 years or 10 rounds? 1 crore, right? 10 lakhs into 10. Now, what you need to do is do your asset allocation. What is asset allocation? Allocating money across different assets is asset allocation. I will not give you give you information as of now what is the right asset allocation, because I want you to discuss and want you to come up with ideas as to what should be an ideal asset allocation. Since there would be a team and each team will have to make a unanimous decision, there will be a captain of the team. You amongst yourself have to decide the name of the team, captain of the team. These two things you have to decide, and how much you want to allocate. Say you have 100% is the total number in percentage terms. How much percent would you want to allocate to 4 assets which I am listing down now? First one is equity, that is Indian equity. Okay. Second one is international equity. Third one is gold, and fourth one is debt. All other assets barring debt, the returns will actually depend on the market, right? When you will be investing, random 1 year returns will be shown, and it actually depends on the market, and it's a random 1 year. No sequence, no nothing. It's a random 1 year. Returns will come up on the screen. So equity, debt, international equity, and gold. These 3 things are market linked. So your returns depend on the actual market at that time, prevailing at that time. And debt will give you a fixed return of 6%. Now say you have 100%. You have to tell me either you can allocate 25% in each asset, or you can allocate 50% in one asset, or you can even go ahead and invest entire 100% in one particular asset. It totally depends on the team's decision. And you will be given 6 minutes to decide. And once you decide, once the 6 minutes are over, you will be automatically coming back to the main room, and you have to, or captain has to, tell me the allocation on these 4 assets, right? So equity, Indian equity is represented by Nifty. What is Nifty? Nifty 50 or Nifty 50 is actually a representation of top 50 companies among different sectors. So Nifty has a constituents of 13 sectors. Across these 13 sectors, these top 50 companies are there in Nifty. So you can say it's like a barometer of Indian economy. Nifty is a barometer of Indian economy. अगर Indian markets अच्छा करते हैं तो निफ्टी जरूर बढ़ेगी. अगर मैं एज अ फॉरेन इन्वेस्टर के हिसाब से सोचूं, फॉरेन इन्वेस्टर को ये देखना है कि इंडिया ने लास्ट 20 इयर्स में ग्रो किया भी है कि नहीं ग्रो किया, तो वो क्या करेगा? वो ये कर सकता है कि वो 2002 का निफ्टी का फिगर लेके आज के निफ्टी के फिगर से कंपेयर कर सकता है. अगर निफ्टी में ग्रोथ है तो इंडियन कंपनीज ने भी डेफिनेटली ऑन अ, एक कंपनी की बात नहीं कर रहा हूँ, या पोर्टफोलियो 50 कंपनीज की बात कर रहा हूँ, तो एज अ होल इंडिया हैज ग्रोन ओवर लास्ट 20 इयर्स. सो निफ्टी इज अ बैरोमीटर ऑफ इंडियन इकोनॉमी. सो निफ्टी में सबसे ज्यादा वेट क्या है? एक ट्रिविया क्वेश्चन आपके लिए मैं रखूं तो एनीवन हैज एनी आइडिया? open to all this question.
It is Reliance Industries, sir.
Yeah, how much percentage?
Somewhere around 32.
Somewhere around
22 or 32.
You were right with Reliance, but the percentage is around currently around 12%. But anyways, that was a good effort from your side. Reliance is definitely the number one stock or the number one holding of Nifty. So what is in terms of sector? In terms of sector, which sector has the maximum weight? Or किस sector का सबसे maximum investment है Nifty?
Currently unmuted.
IT.
that's incorrect. Anyone else?
Sir, banking.
Absolutely. Banking and financial services has about 36% weight. मतलब मैं बोल रहा हूँ 13 सेक्टर्स है, उसमें से 36% तो बैंक और फाइनेंशियल सर्विसेज ही है, क्योंकि एचडीएफसी बैंक, बजाज फाइनेंस, ये सब के बहुत बड़े बड़े, आईसीआईसीआई बैंक, बहुत बड़े बड़े वेट्स है निफ्टी में. तो
सर बाजाज,
सॉरी,
Bajaj Finance.
Bajaj is also there.
ICICI.
Bajaj is also there. Not among the top 4-5 holdings, but it's among the decent side holdings of Nifty. अब मेरे को ये बताइए कि अब निफ्टी विल बी रिप्रेजेंटिंग ऑफ इंडियन इक्विटी, मतलब इंडियन इक्विटी में आप इन्वेस्ट कर रहे हैं तो आप निफ्टी में इन्वेस्ट कर रहे हैं, ये ध्यान रखिएगा. एंड सेकंड इज इंटरनेशनल. सॉरी
सर, मेरे को एक तो क्वेश्चन है. एक्चुअली हम
I'll be taking up questions. Just give me a minute. Just let me finish these instructions, and then I'll be opening it for questions, and then you'll be going to the breakout rooms. Just give me a minute. Just give me a minute.
Okay.
Yeah. So now this equity I said is represented by Nifty. Second is international equity. International equity will be represented by Nasdaq. What is Nasdaq? Nasdaq कहाँ पे listed है? कोई बता सकता है?
USA.
USA. Absolutely. Nasdaq में कौन सी कंपनी का मैक्सिमम वेट है?
IT companies.
Yes. कौन से पर्टिकुलर कंपनी का?
It should be Apple or Google.
Apple. Absolutely correct. You guys know a lot. You actually know a lot. So Apple का सबसे बड़ा वेटेज है Nasdaq में, और Nasdaq एक बहुत ज्यादा टेक हेवी इंडेक्स है, मतलब टेक, इसमें ज्यादातर टेक्नोलॉजी स्टॉक्स ही है, ज्यादातर, मतलब 36% तो फाइनेंशियल सर्विसेज निफ्टी में है, बट निफ्टी एक फिर भी एक डाइवर्सिफाइड इंडेक्स माना जाता है, बट ये Nasdaq एक टेक हेवी इंडेक्स माना जाता है, मतलब टेक्नोलॉजी अगर अच्छा कर रही है तो ये इंडेक्स बहुत अच्छा करती है ओवर अ पीरियड ऑफ टाइम. सो कोविड के बाद ये इंडेक्स ने बहुत अच्छा किया है, क्योंकि एवरीवन has understood the importance of technology, right? So this index has done well. तो अभी मैंने आपको बोला निफ्टी रिप्रेजेंट करेगा इक्विटी को, इंडियन इक्विटी. इंटरनेशनल इक्विटी इज Nasdaq. देन थर्ड इज गोल्ड 1 ग्राम के प्राइस के हिसाब से आएगा, और उसके हिसाब से रिटर्न 1 ईयर रिटर्न्स कैलकुलेट होंगे. और द डेट विद डेट आई सेड विल गिव यू फिक्स्ड रिटर्न ऑफ 6%. So you have to allocate among these 4 asset classes: equity, Indian equity, international equity, gold, and debt. So now you can ask your question. Anyone having any questions regarding, because you'll be now, once you are split into teams, I would not be able to help you much then, but if you have any questions to understand the game which we are about to play, you can ask now.
सर, मैं सुजय
Yes.
कुंडू बोल रहा है शिलीगुड़ी से.
हाँ बोलिए.
बोल रहे हैं सर, हम शेयर मार्केट और म्यूचुअल फंड में इंटरेस्टेड है, लेकिन एक बात बोलिए जो
ये सब क्वेश्चंस मैं एक्चुअली बाद में लूंगा. मैं क्वेश्चन आंसर के लिए स्पेशल, जॉर्ज सर हैज बीन वेरी काइंड, ही हैज गिवन अस अ लॉट ऑफ टाइम, सो वी कैन हैव क्वेश्चन आंसर सेशन लेटर ऑन. बट अभी जो आपको क्वेश्चन पूछना है वो ओनली रेलिवेंट टू गेम होना चाहिए. सॉरी फॉर दैट, सॉरी फॉर इंटरप्टिंग यू, बट अभी हमारे लिए, क्योंकि सारे पार्टिसिपेंट्स के लिए अभी इसके बाद गेम खेलना है, एवरीवन हैज टू एंजॉय द गेम. So it's very important that we understand the game properly and what is expected out of us. So game को लेकर किसी के पास कोई question है?
Yes sir, hello.
Yes.
Piyush,
Yes. Yes, go ahead.
sorry, I missed the last 5-7 minutes. What is the game that you're talking about?
Okay. I'll briefly try to explain again. So for the entire group that we are having here will be split in 4 different teams. Okay, there will be you'll be automatically moving out to the breakout room. Okay. So amongst your team you have 4 assets: Indian equity, international equity, gold and debt. Debt will give you a fixed return of 6%. You have to do your asset allocation. There will be 10 rounds. Each round you will be given a sum of 10 lakh rupees. Okay. Once you do your asset allocation, you have to give your asset allocation in percentage terms. Once you do your asset allocation, that asset allocation will be valid for next 5 rounds, first 5 rounds. Then you will be going back to your group again to strategize for the next 5 rounds or the final 5 rounds.
Right.
Okay. So now I hope that sounds good.
Yeah, yeah.
Yes.
Piyush,
Yes.
a question here.
Yeah.
How would you communicate the value of the Nifty and the Nasdaq?
Yes. So what will happen is when Nitish, my brother, he'll be helping us with the game. When he hits the play button,
Yeah.
Nifty random figure of Nifty, Nasdaq, gold will come up on the screen. Okay. And once he presses invest, that money will be invested on that rate and on a particular date. That date will also be mentioned. So it could be, say, 9th of September 2009. It could be 2nd July 2015. Any random date which will come up. It is a it will auto populate these numbers. And if you on that particular date, Nifty figure was that, say, on 9th December 2009, Nifty was at, say, 5,000. So that Nifty figure will be 5,000 and date will be flashing on the screen as 9 September. As for participants, they don't have to worry about it because they are already doing their asset allocation. They have already decided. So whatever Nifty is.
No, but would they need to know the Nifty and Nasdaq value before
that's the best part of the game. No figure has to be known.
No, but then on what basis would they be guessing the allocation then?
Yes, this allocation ideally should be based on a strategy. Suppose you were to invest today, what would be your asset allocation? Not looking at the market. You don't look at the market. Don't think about the market. Just think about equity as an asset class, which gives good return in the long term, but is volatile on a yearly basis. Debt will give you a fixed return. International equity will be volatile at the same time, and gold will be also volatile because gold also doesn't give a fixed rate of return.
So you're making your asset allocation based on your preference of the character of the asset.
Yes, and it actually, because the people in the group will be of different ages, so I want people or participants to discuss amongst themselves and don't consider other factors. Just clear your mind and think what should be the ideal asset allocation if you have a sum of 10 lakh rupees.
So gold is not as volatile as Nasdaq and Nifty.
Surely not as volatile, but yeah, obviously not as volatile. So for a diversification point of view, if someone is conservative, then they can invest in gold, not as volatile. So that is why. So I don't want people to think much. I just want them to decide amongst themselves and come up with a figure. And they gradually when we play, they will learn a lot of things.
So the players are actually only deciding 10% in equity in Nifty, 25% in Nasdaq, 10% in gold, 50% in this one. So they just take that decision, and then when the invest button is pressed, each group will know how much
money they have made, or lost, and this will go on for 5 rounds. Suppose a team has made 20% return in the first year, so that 10 lakhs becomes 12 lakhs, right?
Yeah.
At the end of 1 year, though at the second year, beginning of the second year, they will get another 10 lakhs.
So 22 lakhs.
Capital becomes 22 lakhs. Now return will come on 22 lakhs on the same asset allocation, because this asset allocation is for next 5 rounds. First 5 rounds.
So it's partly speculation and partly
not speculation. I would just say clear your mind, because see, asset allocation is something which needs to be done and needs to be done, because what happens is, if people, I actually won't take a lot of time, because I'll be giving ideas if I talk a lot now.
Okay.
Yeah.
So basically, these 5 rounds means 1 round depicts 1 year.
Yeah.
Yes, absolutely. Okay. So shall we break out in separate rooms, or is there any other question?
Shabnam, are you around?
Yes.
So I'll just again tell you briefly what needs to be done. You have to tell me your team's name of the captain, or captain has to speak to me after the breakout room has opened up, or breakout room is over, and you have to tell me your asset allocation. These 3 things: team name, captain name, and asset allocation.
So they come out of the room and talk to you, or you go to the room and they'll tell you?
No, they come. It's better. Yeah, if Nitish can go to the rooms and ask, because
Yeah.
If they come on the main room, then other teams' decision might be affected.
Yeah.
Yes. So Nitish will go on. If we can increase that time to 10 minutes, maybe.
So
Okay.
you can tell us how much time you want, and we'll accordingly.
Just a second. Keep 8 minutes. I think 8 minutes should be more than sufficient.
But have you already formed the teams? I mean,
No,
sorry.
No, teams will be randomly allocated, randomly formed. Once you are in the breakout room, you will know whom you are with. You will be speaking amongst yourselves.
Okay.
Okay, can I create then?
Yes, please create with 8 minutes.
You want 8 minutes?
Yes.
Okay, so that makes it, George, 9 minutes. We can give it.
No, you can keep it total 8 minutes. I've taken a buffer.
He has already taken a buffer.
Oh, you have taken the buffer. Okay.
Yeah.
So we want 4 only, right?
Yeah.
Yes, 4 teams.
So approximately 8-9 people in each group.
And this asset allocation, I mean, does it have to change every year, or do you keep it like this?
Next 5 years, it remains the same. And then you will give again going back to the breakout room and for the next 5 years.
Okay.
Okay, I'm creating 1 minute. So you said
4 rooms. 4 rooms, 8 minutes, automatically assigned. And the co-host needn't be assigned.
breakout room, 8 minutes I'm giving.
Yeah.
Yes.
And
Yes.
countdown time I'm keeping 60 seconds.
Yeah.
Yes, sure.
And we have an option of allowing participants to return to the main session at any time. Do you want
No, we don't want them to
you
return.
just automatically move all assigned participants into breakout rooms?
Yeah.
Yes.
Co-host stay outside.
Yeah, I think that will automatically happen.
Countdown options. Okay, so this is done. So I'm going to open all rooms now.
Yeah.
Yes.
Bye, folks.
George, you're still here?
Yeah, I'm not going to any of the rooms.
Yeah. So,
So I think Piyush's brother, what's his name? Nitish will. Piyush, you are outside or inside?
I think he's also inside some room.
Piyush has gone into some room.
And this gentleman who spoke to me just now, he's outside.
He's Nitish. Nitish, yeah, Nitish is still outside.
Yeah, I'm outside.
Almost.
I came out of the breakout room.
Okay, fine. So that's okay. So do you want Piyush out?
I've brought. I've asked him to come to the room.
Okay, so Piyush is here. I am here. Nitish is still here. Rahul is also here, and somebody else is here. I don't know why they're not assigned.
I'm also there.
Yeah, Piyush, you're here.
Yes.
So who is it that we don't have? Room 3, room 4. There's somebody with Asus who is still out. Why isn't he assigned? So I'll just assign. Okay, so I can see room 1, there are around 9 people.
Yes.
Room 2 has around 9 people. Room 3 has only around 7 people. And room 4 has 9 people.
That's okay.
That's okay. Not a problem. Can someone help us with going around the rooms? Not now, maybe after 3-4 minutes, going around the rooms and just taking a note of the name of the captain, team name, and the allocation.
Yeah, I think Nitish, you know how to navigate yourself through these rooms?
Yeah, I can get into any room, I feel.
Yes. Nitish, make a note of the name of the team, captain name, and the allocation.
Okay.
After 3-4 minutes, you can start going to the rooms.
When should I share the screen? When
After
should I share the
after they
screen?
come back to the main room. After they come back to the main room.
Okay.
So I have some people who keep coming in and then I'm having to assign them to rooms.
Okay, people are coming back again. Okay.
I don't know how, whether they're new or whether, yeah. So wherever I find less people, I'm just going to assign them to that room.
Okay, sure.
Room 3. 9.
I think there is a time counter going on at the side now.
Yeah, but according to that, they only have 4 minutes and 32 seconds.
They have 4 minutes 32 seconds.
Yeah. Now
I'll just ask. Nitish, you are there?
I think he's gone in.
Yes.
Okay.
she's
Yeah,
still
you can start going in the rooms.
I'll ask them the captain name and
Team name, captain name, allocation.
allocation. First, I have to share the screen and then.
No, you can share the screen later.
Okay.
The problem might be in the second, third, fourth, fifth rounds, where if they come out and go back, whether they'll go into the technological.
No, second, third, fourth, fifth rounds, first to fifth rounds, they won't have to go back to the room. It will be allocated according to their asset allocation, which they give now. After 5 rounds, they will go back.
Okay, for the next round of allocation.
Yes, they need to go back only once.
Okay. So it doesn't matter whether they're in the same group.
It ideally should be they should be in the same room.
Yeah, just in
But
case.
I think they will be, if we don't click the recreate button, they will be moving to the same rooms.
Yeah. So don't recreate, Shabnam. Just
recreate.
You just once they are in the room, you just click on when they need to be sent back to the breakout room. Just click on open breakout rooms.
Okay.
Yeah, no, but what's okay? So after 8 minutes, they all come out now. All of them will come out.
Yes,
So
and 5 rounds will be played.
Yeah.
And then they will be going back to the breakout rooms.
Yeah. So Shabnam, you'll need to send them back to the room only once more.
Only once more.
Yeah.
Yes,
So, for that you'll only have to do open breakout rooms. So it's also a learning for us to use these breakout rooms.
Yeah.
Somebody's come out again.
Yeah, there are 4 parties. Who is Ketho?
Keto is our colleague.
Okay.
She's come out.
Keto is outside only. She's recording also, no? She and I both.
Okay.
I think we can pause the recording for now.
Yes.
14 equity and 25 in debt.
Okay, great. Okay.
And one group 4 is equity tigers, led by Siddharth. Gold is 5%, international equity is 30, equity is 50, and 15 is debt.
Okay, let's play the first round. So most of the investors are aggressive, investing more in equity. Let's see how the round goes.
Debt.
Have you clicked on invest, Nitish?
He's
No,
just
I'm
checking
just.
the numbers.
Yeah.
I'm just
So
adding
first
the
round
numbers.
results are out, I think. Yeah. So can you tell me how much return has each asset has given, and what is the date?
No, I'm just
He's just putting the numbers,
Okay, okay.
yeah,
Asset numbers in at the moment.
numbers.
Okay, okay, okay. Great. Great.
gold is 20. Gold is 20 international. equity. Check as I go along.
You need to check properly too.
So Friday's debt is 10, equity is 40, gold is 10, and international equity is 40.
No, not that number. I think the numbers which Nitesh is just putting in.
Uh-huh. I'm just repeating what he is putting.
Yeah, Shabnam, you can repeat, and I would request the participants or the captains to listen to Shabnam and just re-verify the numbers.
Yeah, so Friday, the group Friday, their debt is 10, equity is 40, gold is 10, and international equity is 40. Is that
Correct, correct.
okay?
Yes,
Now
that's
money-
correct.
Okay.
Yeah.
Okay. Money management team, your debt is 20, equity is 30, gold is 20, and international equity is 30.
Yes, exactly correct.
Okay. And now bear hunters, your debt is 10, equity is 40, gold is 10, and international equity is 25.
I think there's a problem here.
Ma'am, debt is 25.
Okay, debt is 25, bear hunters.
Yes.
Can you repeat your allocation once? Debt 25. How much in Indian equity?
That is 25, sorry.
Yeah.
Yeah, you
Does
know the
that-
allocation.
That is
Does
20.
it, does it sum up to 100?
Okay, now bear hunters is 25 debt, 40 equity, 10 gold, and 25 international equity.
Yeah,
Yes,
okay.
ma'am, that's correct. Yeah.
Yeah.
Equity
Oh, great.
tigers is debt is 50.
Now we have equity tigers. Equity tigers, your debt is
Debt 50.
15,
Yeah.
gold is 5, and your other numbers are coming up. Give us a moment.
50 in equity and 30 in the 30 in international equity.
Okay, I'll repeat equity tigers, your numbers. Debt is 15, equity is 50, gold is 5, and international equity is 30.
Yeah,
15, 5, 50, 30. Okay.
correct.
Exactly.
Should I press the invest button?
Yeah.
Yeah. Yes.
Yes, button. Okay, numbers are up.
Yes. So maybe Shabnam, you can read them out again.
Friday, your debt is
So I'll do this.
You just need out. You need to read out the returns at the bottom of the screen.
I'll do this. So
Yeah,
the
please.
Nasdaq. This data is from 29 June 2009. Nasdaq has delivered 18.89%. Nifty has delivered 19.7%. Gold has delivered 29.06%, and debt is fixed at 6%. So after the first round, Team Friday, their total investment is 11 lakhs 89,420. Money management team 11 lakh 85,890 rupees.
Right.
Bear hunters is 11 lakh 70,085 rupees, and equity tigers is 11 lakh 78,700.
So who is leading?
So the team that is leading is
Friday, I think.
Friday. Friday is leading
great.
just by 4,000 approximately.
Okay, great,
Now,
great.
just to review this,
Very-
people did not they were very hesitant to invest in gold. If they had invested in gold, probably they would have done, they would have shot up beyond 12.
Right.
Yes.
Yes.
Right. At times, gold, especially in the, if you see the first earlier part of COVID, when gold actually was the first asset to give phenomenal returns.
Yeah.
Gold prices went up from 34,000 to about 50,000.
Right.
Yeah, Nitish, next round we can play.
Oh, I didn't realize we were talking about 2009 when you did this first year. Okay.
Yeah.
Okay.
Yeah, first you have clicked on invest, Nitish. Yeah.
Yes. So this data is from June 18. So
You're sorry, your
Nasdaq had
voice
delivered
was lost.
9.09%.
What is the year
This data
and
is
date?
from June 28th, 2018. What he said.
Yes. Okay.
Yeah. Nasdaq delivered 9.09%. Nifty delivered a return of 11.33%. Gold gave a return of 13.52%, and debt is fixed at 6%. And currently, Friday is after 2 rounds of investment, that is 20 lakhs. The total amount is 24 lakhs 10,989.
Oh,
Money
you don't have to
management
repeat.
is 24
Don't repeat
lakhs
the amount
5,000.
again, Nitish. Don't repeat the amount, the entire amount. We can do it after 5 years. Just after every round, just tell us the name of the team who is leading.
Leading.
Yeah.
Friday
Okay.
again, I
I'll
think.
just yeah. Friday is leading approximately by 5,000.
Okay. Again, Friday is leading
I'll
after
click
2
the
rounds.
play button
But I
again.
have noticed I have been having been played this game with lot of groups and several times, that people who start at the winning part earlier in the 2 to 3 rounds they are winning, they end up losing the contest. So let's see what happens this time.
Okay.
I'll continue.
Yes,
Yes.
please.
So this data is from 29 June 2004. Nasdaq has just delivered given a negative return of 0.1%.
You now
Nifty
unmuted.
has delivered a return of
Speech off.
Nifty has delivered a return of 44.35%. Gold has delivered 4.44%.
Audio now unmuted.
So after round 3, Equity Tigers is leading with 41 lakhs 85,991.
Okay, now equity tigers, the equity investors, the people who actually have faith in Indian equity are now leading.
50% they put.
Yeah.
So that's not bad.
Audio now unmuted. Speech off. Speech on. Share content. But
We
31.
are getting some disturbance.
I'm
Not
just
my
trying
video.
to see 1
Button.
minute whose phone it is. Everybody's on mute. I don't know who that is.
Is that yours, Piyush? Your
No,
My
not
video.
mine.
My audio.
So at the end of round 4, this data is from 29 March 2016. Nasdaq had delivered a return of 21.54%. Nifty has delivered a return of 20.36%. Gold having a negative return of 1.32%. And after round, I can see Equity Tiger still leading with 60 lakhs 92,294.
Okay,
That's good.
2 rounds won by Equity Tigers.
The last round of this time frame. So at the end of round 5, this data is from 29 June 2004. Nasdaq had delivered a return of 8.59%. Nifty had delivered a return of 8.93%. Gold had delivered a return of 1.78%. And after round 5, uh, it is still Equity Tigers that is leading with 76 lakhs 61,876.
Wow.
So Equity Tigers are already made 50% on their capital because they have invested 50 lakhs. Now their investment is over 76 lakhs.
What about the others? Just read the others. also.
Other numbers. Yeah, other numbers. Please announce the other numbers.
Other numbers,
Friday.
other
amount.
numbers
Yeah.
that will be Friday. Friday is at 74 lakhs 59,242 rupees. Money management is at 70 lakhs 43,052 rupees. Bear hunters is at 72 lakhs 98,147 rupees.
So none of them has actually done badly. So everyone is still in the contest. I think for the next 5 rounds, anyone can actually turn around and end up winning the contest.
So the
So
interesting thing.
anyone has any question at the end of the first leg of this
So
particular
what was the
activity?
Friday's return? 24 lakh, right? 24 lakh, right?
74.
No, but the return in terms like
Yeah, return is roughly around 24 lakhs. Yes.
Yeah.
So this data that you've taken out, I mean, you've gone back to 2009, 2018, and so on and so forth. So you've taken the yearly average of rate of return
Yeah, suppose
for
the date is
for each one of these asset classes.
Yes. Suppose on 20th June 2009, if that date is coming up, and if you would have done exactly the same asset allocation according to this would be your return for 1 year or in 1 year time frame.
Yeah, I think
in
this.
in the next 5 years, we are looking at what years now? I mean, are we looking at
any
2022?
year, any random year can come up between 2001 and 2020.
Okay.
Yeah, so the idea here, I think, is Siddharth and the others is to kind of strike a balance between the four assets. Because what is going to happen tomorrow, nobody knows.
Yeah.
Nobody knows.
So whether they're taking 2003 or 5 or 7, it doesn't matter. Because that's even the future is going to be the same, you know.
Yeah.
So it's about understanding the the characteristics of the 4 assets and strategically kind of giving a percentage allocation.
Yes. And you have seen across in the round that 5 rounds that you have played, that each asset class over a period of time has potential to generate returns.
Correct.
It's all about diversification and like the Equity Tiger strategized and put in equity more. So it's all about managing your own risk. It actually depends. So
your risk appetite.
You don't have risk appetite. You don't have to see or visualize anything. You just have to go according to your risk appetite, your goals, and the time that you have. Suppose Equity Tigers must have thought through that they want to invest for long term. So they have invested because I said 5 rounds. So they invested more in equities. So because they thought in 5 rounds, maybe if even if say 3 rounds equity does well, then they would be able to outperform the others. But the thing is, don't take this for granted, because this has just to give you a feel that never in this this scenario the equity market has delivered 20-30% negative return, which could happen in the next 5 rounds. So you never know. So you need to still be careful with your asset allocation. And because I also don't know which figures will come up. I don't know. It is all random.
So we send them back, and what do they have to do when they go back?
Yes, they can go back to the rooms.
So should I open
No.
Yeah.
What are we supposed to do now? What are we supposed
you
to
have to do your asset as you have done the asset allocation for the first 5 rounds. Now you have to do your asset allocation for the next 5 rounds, which are the final 5 rounds. After the end of 10 rounds, the team having the maximum amount will be announced as the winner.
But having the maximum amount for all 10 rounds.
Yes, because this tally that Nitish mentioned is actually accounting for the first 5 rounds totally.
Okay. So the next 5 will be added on to these 5. Yeah.
Yes, absolutely.
So you have an opportunity to learn from this experience of just now to reallocate when you go back.
Right.
Piyush, how much time do you want to give them this time?
5 minutes. 5 minutes.
5. Okay.
Excuse me, sir.
Yes.
Sir, actually, I have a doubt. Actually, we made this investment keeping the future in mind.
Yeah, same here.
Yeah.
Yes. But future figures no one has. So obviously, see, you invest in based on the future. That is what you will do when you step out after this session. But
Yes.
this is just to give you the feel of it.
Right.
Feel how the markets are there, and if you're diversifying. Because
And
see,
so-
another thing you might not have noticed has happened. Suppose you have invested, say, 10 lakh rupees. Okay, and equity market, and you have invested, say, 50% in equity. An equity market has given very good returns. Your value has now gone up to, say, 14 lakhs. Okay. Now what will happen in the second year? What has happened is your equity allocation remains same at 50%. So but your value of equity has gone up. So you have to sell some equity and bring back that equity allocation to 50%. So this is happening automatically every year. This entire phenomenon is called constant weight asset allocation. Your asset allocation weights remain same. Your equity for the first year was 50%, for the second year also was 50%. So second year में क्या हो रहा है कि because of equity giving good returns, very good returns, the equity exposure automatically went up, जो कि कुछ sell करना पड़ रहा है equity to bring it back down to 50%. So yeah, this process is automatically happening. So when you step out investing and when you want to do the asset allocation, you have to do, and you want to do it this way, you have to do a yearly review. Yearly review में मतलब suppose your investment of 10 lakhs has grown to 14 lakhs. Now that 14 lakhs has to be allocated in the same asset allocation which you did like last year. Then your constant asset allocation will be maintained.
So, so just to repeat and reiterate what you said, Piyush,
Yes.
they've all gone back or they're still around?
No, I haven't opened rooms yet.
Okay. So I think just to reiterate, this asset allocation that you've done in year one will continue through the 5 years. So each year, whatever the gains you get or losses you have will be kind of balanced out,
yes.
To maintain the same asset allocation percentage.
Yes. Because see, because why I'm doing this is because if suppose equity market say goes up, if you're investing now, say equity market goes up 100% in the next 2 years.
Yeah.
Then obviously equity is an asset which is volatile. Some or the other day it has to come down, right? So what will happen if you don't cut down your equity at that time?
Yeah.
You will some or the other year get negative returns.
Yeah.
But if you maintain the same asset allocation, your risk is better managed.
Okay.
Okay.
Got it. Should I open the rooms now?
Yes.
5 minutes. Okay, that's it.
Yeah.
Yes, 5 minutes.
So Nitish can go in right away.
Sorry?
I have one question.
Yeah.
Yeah, tell me.
Yeah, that means we have to come out once again with percentage or amount?
Percentage.
Understand. Thank you.
Percentage for next 5 rounds.
Okay.
Okay, I'm opening rooms then.
Okay.
Nitish, you can go in. Nitish, you can go in actually.
Where is Nitish? Nitish is already gone in somewhere. Where is he? Let me check him.
There are 2 Nitishes, by the way.
Rakhecha you're talking about, right?
Yeah.
And Piyush has gone to room 3. He'll come back. But now the problem is some of them dropped out. There are 5 people who are out. 6 people. No,
So
5 people who are out. Where do I assign them?
You ask them which room they are in and they can go in.
निंगराज, आप कौन से ग्रुप में हैं? आप अनम्यूट कर दीजिए अपने को. निंगराज, can you hear me? I need to assign you to some room.
Ask the next guy.
Madam Saravanan here. I'm in room 1, ma'am. Friday.
Okay, you are in room 1.
Yeah.
Yeah.
She's sending you. राजेश बोरले, कौन से रूम में थे आप? Who's that? George, you have put your hand up by mistake, I think.
Who me?
Yeah.
Okay.
Prabhu?
Yeah, I just joined. I just joined now. I was in another meeting.
You can add him to any group, any particular group.
Okay, I'm adding him to room 2. Deepak Chawda, Rajesh Borle. I'm just going to add them to any room now. Doesn't matter.
Anyway, I think the concept is understood.
Understood, and I was accidentally actually I entered one room, so it actually is very fascinating if you go to the room and see people discussing and debating about what the right asset.
Okay, I'm curious. I'm going to go in all the rooms.
Yeah, you can go. Yeah.
Okay, I'll see you in a bit.
Hello.
I think Jagdish
he
is thinking.
is not here. He is not here. I think.
He's not here.
I think.
Oh God, then what
Yes,
are
7.
what we do?
What happened? Kya hua? What happened? You're not.
Divya, are you there?
Divya ma'am, are you here?
Are you not discussing where you want to put room number 1? You're not discussing what you want to do?
Actually, we have discussed 2-3 participants are missing.
Yeah,
Who is missing?
Divya and Jagdish.
Okay. I will wait.
1 minute. Divya is in your group, is it?
Yes, and also Jagdish.
Divya must have dropped out because of network issues. Divya is not here right now.
Okay.
And who else do you need?
Jagdish.
Jagdish is in yours? No,
Yes.
Yeah.
But but this is not room number 1, right?
It's room number 1, ma'am. Friday group.
Yeah, so Jagdish is already here in room number 1.
Okay, Shadi, he is talking something another phone. I think.
She's not audible or something.
Must be a network issue from his end. Jagdish?
Maybe.
We already called him.
Okay. So why don't
no
you?
issues.
Oh yes, Jagdish sir is there.
Yeah, he's.
Its audio is muted, I think, or unmuted.
Okay, carry on then.
Okay. So who?
Who lead us?
Okay, I take this.
We just have 20 seconds, guys. Come on, quickly.
Okay, so sir, let's say that is 8% and 22 to gold.
Okay.
Or 25 or 25. Yeah, 22.
I haven't shut the rooms yet. If you want to continue debating, you still have time.
Okay.
Yeah, go ahead. आपका हो गया हो तो then it's okay. If not, then.
No, we have decided it.
Oh, you have decided? Very good. Okay.
Sir, I think 8% is enough for gold, I think, sir. Because the gold does not have create that much of returns within 5 years.
Yeah, it does not create that much return. That's why we won the game last time.
Yeah.
That's why we won the game last time.
The lowest return at any point, if you would have entered that particular investment, the lowest return in a particular month or a particular horizon, maybe lowest that you would have seen with your eyes is like only -5%. And the return, the CAGR return is about 22 to 23%.
Okay.
Piyush, sorry to interrupt you. Should I continue?
Later on,
Yeah, let Nitesh indicate that it's done.
Oh, Nitesh has to indicate. Okay.
Yeah, Nitesh has gone back to those rooms for that. Just a second.
Okay, sure.
No.
So what was your what did you hear when you went in?
The room number 1 were looking for their captain, and the captain was missing in action, so they were calling him. Then finally he joined. Jagdish joined.
Okay.
And then they started.
Okay.
Then room number 4 least bothered who was coming in and going because Siddharth and everybody were busy talking. And I went to another room. They were already done with allocating
Okay.
their shares. Yeah.
It'll be interesting to see how they have changed. What
Yeah,
changes they
yeah.
made.
Seeing, because see, now interesting thing will happen is what people do is based on their experience, past experience. Now they have seen the 5 rounds. Based on that experience, they will change the asset allocation, and
Yeah.
something completely different might happen.
Yeah.
In the next 5 rounds.
Yeah, and
So
I think
that is how
that's
people will learn. Yeah.
yeah, and that's the idea of the whole thing.
Yeah, that's the idea. Because see, looking at the rare view, or if you have the rare view while you're driving, you always have to look front.
Yeah.
If you're looking at the rear mirror,
Yeah.
then it actually doesn't serve the purpose.
Yeah.
So as they say, you need to hope for the best, but also prepare for the worst.
Yeah. That's what Jack Reacher says. Yeah.
Yes. Yeah.
Shall I just join you in a minute, huh?
Yeah, sure.
Divya, where were you? Where do you want to go? You want to stay here? You are in the main.
Yes, yes. Actually, there was a technical issue. It's
Where do you
raining
want
here.
to go? You want to go or you want to stay here in the main room?
No, as of now, I'll be okay here because I was not there for last 5 minutes because of this connection error.
Okay, no problem. Anyway, what room were you in? Which room?
I was in room number 1 Friday.
Oh, they were looking for you actually.
Yeah, actually it's raining, so connection error. Yeah.
Raju, where were you? Raju, आप कहाँ थे? म्यूट पे चले गए आप. कहाँ थे आप? जाना है या?
No, actually, I don't know where was I actually.
Actually, you are new. You are new right now. I mean, you just joined or you joined earlier?
Yeah, I joined earlier, but I didn't attend properly.
Oh, you didn't attend properly. Okay,
Could you please send me to the room number 1? They may be looking for me.
Okay, I'm just going to send you. Piyush has also gone somewhere. Nitish is.
No, I'm here.
Oh, Piyush, you're here. Sorry, I did see. Okay, Nitish is in room number 4 right now. But it takes quite a while to enter some room also, you know.
Okay.
It's not quite quick. It's not very quick.
Yes, maybe they have to fix. And actually, there are a lot of people moving here and there, moving around. So for this thing, technology thing also, it becomes very difficult.
Yeah, but these guys can't move around.
Yeah, these guys
They have
cannot
not
move.
given that option to them.
Yes.
Yeah, Tablam, hi, this is Jagdish. Can you hear me? I was very much there in the room, but somehow I could not be heard by others. I don't know.
They must
some
be
technical
panicking
stuff.
without you. 1 minute. Let me just assign you.
I got all the asset allocation of all the teams.
Okay, then everyone has to return to the main room. That's okay.
Should I close the room then?
Yes, you can close the room. It will take 60 seconds. You can close the room.
I've only put it for 30 right now.
Yeah, okay, that's good. That's okay.
Okay, so I'm going to do that.
Has Nitish come out?
Yeah, Nitish has come out with the allocations.
Okay, so now they can close.
Yeah, I've closed it. They'll all come here one by one. Okay, the rooms have closed now. They'll all start coming.
We are back
I
to
don't know,
Now,
maybe.
the main session.
we are back to main room.
This meeting is being recorded. Allocate space. 3 people have joined the meeting. Alert. You are in the meeting hosted by George Abraham with 30% space.
Okay, I need to start muting people.
Zoom meeting. Leave. I'll more.
This Babita who's there is our
Here's-
Babita or some other Babita?
Joe, close. Start my video.
She's our Babita.
Start my
I'm
video.
guessing because there's no
Mute.
other Babita who's
Currently
joined.
unmuted.
But she's still
Alt plus
connecting
a
to
button.
audio.
Okay.
Yes.
Menu.
Uh, George, sir, if you don't mind, I want to talk to my participant leader because he was lost his connection.
Yeah, please go ahead. We are all outside now. Who was your leader?
Jagdish sir, are you leading or should I lead? Jagdish sir?
No, but I think your reallocation already has been noted down by Nitesh Rakija.
Okay, then no problem.
Yeah, I'm here. Sorry. Yes. That's okay. But I think the group has decided it's fine. I'll go by it.
Yeah, okay.
Yeah, it's just that I could not be heard. I was able to hear you all.
Okay.
Yeah, Nitesh, all yours.
Yeah, I'll repeat what the teams have chosen. So Friday has kept 7 in debt, 14 equity, gold 13, international equities at 40. Is that correct?
Friday.
Team Friday, he's
Yes,
repeating the numbers.
it's correct. It's correct.
Okay.
So next is money management. Debt is at 10%, equity 40%, gold 20%, and international equity is 30%. Is this okay?
Correct.
Yeah. Bear hunters is next. Debt is at 10%, equity 40%, gold 25%, and international equity is also at 25%.
Yes, sir. Correct.
Equity tigers 12% is debt, for 50% in equity. Gold is 8% and international equity is 30%.
Yeah, that's fine.
Yeah, Piyush.
Piyush is on mute.
Piyush has gone into the
Yes,
room.
yes. Sorry. Yeah.
Piyush, it might be interesting for each group, one person from each group to kind of explain why they made this change, what the change was and why they made it. Yeah, it might
actually,
be.
I actually wanted to do that, but actually I was on mute, so I was not heard.
Oh, okay.
Yeah. So each captain can one by one speak what changes have they done and why.
Hi, this is Jagdish. Can I, because I was actually not able to speak, but I could hear them. I think based on our previous experience, we just learned it's good to increase the investment in gold. But of course, we were hopeful that equity is something that gives us the maximum return. That's how we decided national and international equity at 40-40 each. Is that right?
So you have increased your equity allocation and the gold allocation based on past experience.
No, the based on past experience, the gold allocation has been increased
equity
from 10% to and equity has remained same.
Remained
we have
same.
reduced the debt from 10% to 7%.
Got it. Yeah. Okay, next team.
There's a slight increase in gold.
Yes.
Yeah. So ours is also more or less the same. Equity remains the same for both international and national. There is a 4% increase in gold and debt is at 8%. So gold at 12%, debt at 8%.
Okay.
And 50 and 30 for both the equities.
So you are overweight equities, both international and domestic. You are overweight.
Yeah, because the market has been doing substantially well over the years.
Yeah. Okay. We'll see what happens in the next 5 rounds because even I don't know what will happen. Next team.
I'm Sumant. We have seen from 2000 the gold rate has increased till date. We have increased gold weightage, and this deposits and all debts it has constant rate of interest. So we do not have much interest on it. And the equity market we have given more preference as usual.
More preference. Okay. Based on the last 20 years data, you see that equity market has done well. Okay, that's good.
Yes, sir.
Last team. Which is the team which is left?
Bear
hunters. Yeah,
bear hunters.
Actually, I spoke from bear hunters now, sir.
Okay. You spoke from bear hunters. Then I think Friday.
Money.
No, Friday is also spoken. I think it's money management.
Money management. Yeah.
So this is Praveen from Money Management. I think based upon the past experience, I thought equity will shoot up. So we invested a lot in equity.
Okay. Just to I don't know what will happen in the next 5 rounds, but just to highlight, based on past experience, during COVID, the past experience was that market doesn't give good returns because market had given very bad returns. During COVID, Nifty fell from like about 10-11,000 to about 7,600. That is almost a crash. At that time, people started investing slowly and were fearful. But what has happened in the last 2 years, market has done well. So now what happened is maximum people started participating in a very heavy investment in equities in the middle of 2021. What market has shown, what it has always shown, that it'll remain volatile. When you think with the past experience that equity has done well, at that time it'll bite you. So this is why asset allocation is important, because we know that equity markets will give very good returns in the long term, but we don't know when that year will come. So we obviously need decent allocation in equity, decent chunk of our allocation in equity, but it has to be balanced so that our risk is also minimized. So when market falls, say 40%, 50%, even in 2008, when market fell 60%, at least our portfolio will not be down by 60% at that time. So now, Nitish, you can go ahead and do the math and do this thing. Next 5 rounds. Play the next 5 rounds.
So the next 5 rounds are all going to be bear rounds, huh?
Let me see. Nitish? Yeah.
So this data is from 31st May 2017. Nasdaq had delivered a return of 19.65%. Nifty is 10.71%. Gold is 7.83%, and debt remains the same. So after round one, it is equity tigers that is leading with 97 lakhs 52,961. So
you can play
I'll
the
go
next
to the
round.
next
Play
round.
the next round.
Yeah.
That means of the 60 lakhs, they've got about 37 odd lakhs they've gained, huh?
Yes.
Okay.
So this data is from 28th August 2009. Nasdaq had delivered a return of 7.56%. Nifty had delivered a return of 14.16%. Gold delivered a return of 25.64%. And after round 7, equity tiger still remains at the top with 1 crore 20 lakhs 56,134 rupees.
The 50% equity is paying off, huh?
This time gold did well, but still they have gained good ground, I think, already.
So at the end of 8th round, this data is from 29th March. 29th March 2005, Nasdaq had delivered a return of 16.36%. Nifty delivered a return of 69.08%.
Hey,
Gold
how much?
delivered
Hey, hang on, how much?
69.
That's insane, yeah.
Gold delivered a return of 38.95%.
38?
Yes.
Not bad.
So at the end of 8 rounds, equity tigers still remains at the top with 1 crore 87 lakhs approximately.
Wow, almost 2 crores.
Yeah.
I wish I had actually invested like this, yeah.
More than doubled your money.
So this data is from 28th February 2002. Nasdaq delivered a return of negative 25.71%.
Oh my God, crash.
Yeah.
Nifty delivered a return of minus 6.89%. Gold delivered a return of 14.49%, and at the end of second last round, it is Bear Hunters that is coming ahead
Oh my
with
God, taken over.
1
Just with
crore
the
80 lakhs.
one round of equity returns, we have seen that bear hunters have taken over.
What's the value? What's the value for bear hunters?
180. 1 crore 80 lakhs.
What is it for equity tigers?
It is 1,78,000.
Okay, very close.
1 crore 78, sorry.
You've lost 9 lakhs.
Yeah. Last round coming up.
Yeah, the final round.
Shabnam, can you mute the
I'll just mute.
Who is it? Who is it? Everybody is on mute only. Sometimes
Hello.
I'm muting all, so the person.
Hello. Hello.
Who is that? I can't even see who this person is.
Yeah, this is Pawan.
Okay, Pavan.
I have a question to you. I am pursuing CA right now. So I want to ask you, after becoming a chartered accountant, can I do the consultancy services in investment?
Hey, hang on. You got to wait. Just wait. Let this chapter be finished.
Yes.
We'll
Okay.
We'll finish this chapter and then we'll come back to you.
Okay, I've muted him. Please carry on.
I'll continue. So this data is from 28th November 2008. Nasdaq delivered a return of 48%.
Wow.
Nifty 82.67%.
My God.
Gold 34%. And at the end of 10 rounds, Equity Tiger still winning with 3 crores in the bank.
So at the end of the day, everybody goes back happy with a lot of money.
Yeah, a lot of money. Yeah, but this data actually is kind of don't go by it, because equity doesn't give this much returns on a yearly basis. These are random numbers, so there could be years, 3-4 years even, where equity doesn't do well.
So can we have the total amounts of all the teams?
Yeah. Please, Nitish.
So Friday is at 2 crores 83 lakhs 59,567 rupees. Money management is at 2 crores 82 lakhs 31,208 rupees. Bear Hunter is at 2 crore 96 lakhs 32,067 rupees.
Bear Hunters was very
and
close.
Equity is at 3 crores. Yes.
Interesting. Yeah.
So actually, everybody did pretty well. I mean, except for 5 lakhs here or there.
Yes.
5-10 lakhs. I mean, which is not a very large sum.
Yeah.
I mean,
the other thing is that you're not in a comparative market. So you invested 1 crore and you're walking away 2,80,000,
you're walking
2,90,000.
away with 3 crores.
Yeah.
Yes.
Sir, actually, I lost my connection. May I know the winner?
It is Equity Tigers at around 3 crores.
Oh, nice.
But everybody is a winner, because everybody is more than triple, almost triple their money.
Yeah, nobody
lost out here. The point here I want to make is, don't worry about what others are making, how much returns others are making. If you have made your asset allocation based on certain things that you want to be conservative, stick by it. Don't go by just opinions that market will go up this year, market will go down this year. Stick to your asset allocation. In the long term, you will be successful, as you have seen that everyone is successful. Few lakhs here and there doesn't matter. Even a team which has say less allocation in equity has taken less risk, so it has still been rewarded with handsome returns over a period of time. So what the idea is to balance it out. I'll just since we have taken a lot of time, and how much time do we have, George sir? How much can we extend it to by some minutes or so?
What's the time?
It's 7:04.
So we can probably go up to 7:20.
7:20. Okay.
Yeah.
Then I'll just talk about certain funds. Everyone knows about mutual funds. So, but since our topic or the theme is asset allocation, I'll just briefly cover 2 asset allocation topics in the next, say, 3-4 minutes, and then we can have quick 10 minutes for Q&A. So the two funds which I want to talk about is, one is a multi-asset fund. What is a multi-asset mutual fund? You have two options. Either you can invest in either you can have three funds: one gold fund, one debt fund, one equity fund. There you can do your asset allocation that way, or you can simply invest in a single multi-asset fund, which obviously will announce its allocation, that it has, because you don't choose there. It's a fund, so already choice or the allocation has been made. So say the allocation is 10% in gold, 20% in debt, and 70% in equity. You can invest in a fund like this, where they have a fixed asset allocation. Second fund, and if you are conservative, you can choose a fund which has lower equity allocation. There are funds like that available also. I will not name the funds as of now. We can, if you want, we can take it up one to one later on. And the second category I want to mention is a dynamic asset allocation fund. Very interesting. Every portfolio must have a portion of this if you are looking to have a good, not the maximum returns, but a decent, good risk-adjusted return. So what this fund does, dynamic asset allocation fund. This fund, what it will do is, it will obviously, as the name suggests, it is dynamic. So based on the equity markets valuation, suppose you have seen that in equity markets in the 1 year gave 80% return, 1 year gave 70% return. So what it will do is, when the equity market is expensive, it will cut down on the equity exposure and buy some debt at that time. And when the equity market goes down, you have seen negative returns also when the game you played. When the equity market goes down, it will quickly and smartly increase the equity allocation. So now what will happen is, this fund, there are funds which manages equity allocation between 30 and 70%. Meaning when they think that market is very expensive, they will take the equity allocation to 30%. And when they think the market is very cheap and market has gone down, say like when Nasdaq went down 25% or so, at that time it will increase the equity allocation to maybe 60-70% to capture the upside. Because as we have seen over the years, equity market has never been down and out. It has always recovered, and even if you see in 2020, it fell, Nifty from 12,600, from the highs of 12,600 in 2018 or so, fell down to 7,600. But then when it recovered, it went up to as high as 18,000, breaking the previous high of 12,600 also. So it will always reward you handsomely if you this is a way where you time the market, not based on emotions or fear, like emotions like fear and greed, but based on the fund, because the fund manager also doesn't have a choice. It is a dynamic asset allocation fund where they have designed a model which will automatically, based on equity valuations, dynamically allocate between debt and equity. So now with that, I'll wrap it up with a couple of quotes by Warren Buffett. So the first one being, Warren Buffett said, "I started investing when I was 11 years old, and I was late." Just imagine what he meant by that. There is a huge cost of delay. As young as you are, or as early as you start investing, returns doesn't matter whether it's 10%, 12%, or 20%. You will make a corpus, a huge corpus out of it. Just to give you an example, a person aged 25 investing 10,000 rupees every year for the next 30 years. 25 age, 10,000 investment every month for the next 30 years. He's investing about how much? About 18 lakh rupees. Just imagine what his corpus would be with a return of 15%. It will be around 7 crores. Can you imagine? We are just talking about doubling and tripling of money, but here money has gone up by maybe 30x or so, 30 or 35x. Right. And if you delay, if person 35 starts investing even 15,000 rupees a month for the next 20 years, because both of them has to retire at the age of 55. So then he has invested equal amount. He has invested 18 lakhs. Both of them have invested 18 lakhs. One has invested 10,000 for 30 years, one 15,000 for 20 years. But in the second case, the second person has only accumulated 2.7 crores. Just see the difference. There's a difference of more than 4 crores just because of cost of delay. So, and the second quote that I would like to mention is what is the best investment that you can make. Warren Buffett says, knowledge or investment in knowledge pays the best interest. So with sessions, with reading books on personal finance and about knowing more about money, I'll give you name of three books. Like one is I mentioned Rich Dad Poor Dad. Second is by the same author, Robert Kiyosaki. The second book, name of the second book is Cash Flow Quadrant. Cash Flow Quadrant, with the same author, Robert Kiyosaki. And the third book that I would like to mention is Psychology of Money. Psychology of Money by Morgan Housel. Morgan Housel. So these three books are very good books if you want to start your journey towards financial freedom. Thank you so much. Now we can have a quick 5-10 minutes Q&A. If someone
What
has
is,
any questions.
Piyush, what is the second book?
Cash Flow Quadrant.
Cash Flow Quadrant, okay.
By Robert Kiyosaki.
Okay.
Excuse me, what is the your comment on the book about The Intelligent Investor by Benjamin Graham?
See, if you are a hardcore equity investor and if you want to invest in direct equities, that is a very good book. Very good book. An Intelligent Investor by Benjamin Graham is a very good book because Warren Buffett considers he's kind of a guru to Warren Buffett. So
Yes.
just imagine how much wisdom or how much wealth of information would be there in that book. That book is good if you are a hardcore equity investor and you want to take plunge into equity investments yourself. That is a very good option. And another book for equity investors is Beat the Street by Peter Lynch.
I know what is the name?
Yes, Beat the Street.
Lead the Street.
Yes.
No, it's MEET or LEAD. Lead the Street. What?
Beat. BEAT. Beat.
Acha,
Beat
beat.
the Street.
Acha, Beat the Street. Okay. By Peter Lynch.
Peter Lynch.
So
Okay,
are
so
these?
can we? Oh, sorry.
Go ahead.
Can I say something?
Yeah, please go ahead.
Okay. Piyush sir, what can we say generally? What is the decent allocation of asset? Like, can we say that 30% debt and 70% equity is good? As somebody told me about this. Or
see, it depends on 4-5 factors: your
okay.
risk tolerance or risk taking ability, then your age, then what are your liabilities, if any. Because if there are no liabilities, you can be aggressive. If there are liabilities, you have to be conservative. And your goals, which is very important as well, because that determines your time that you have to invest for. Say you are planning for retirement, you have a lot of time in your hand, so you can be aggressive and put maximum allocation, even 80-90% allocation in equity.
Piyush, I want to ask, what is your third book you said?
Third book I said, Psychology of Money.
Right. By
Morgan Housel. MORGAN Morgan HOUSEL. House and then L.
Right. And the audience.
Sorry.
The audience told that Intelligent Investor book.
Yes. By Benjamin Graham.
Thank you. Thanks a lot.
Sir, am I audible?
Yes, you are.
Yeah, this is Pawan. I'm from Pune. By the way, I'm doing chartered accountancy. After pursuing this course, can I do the investment consultancy in finance? Because I have to spread the financial literacy. Okay, is it possible for visually impaired?
Yes, I'm doing it. I'm visually impaired and I'm doing it I think I'm doing okay with this profession. So you can definitely do it being visually impaired. There is no problem as such, because
no, because normal clients they're thought on visually impaired, that how can they manage. That's
so
why
you have to explain that I also face as a challenge.
Yes.
You start with your own network, because people know that even if you are visually impaired, that you are capable. In your circle, people know that. So you can start with them, and then the word spreads. And people start knowing that you are capable. You have handled or you're handling portfolios, handling clients in your circle. They will start this thing allocating to you also. So it takes time. It will take time. Initial 3-4 years could be very challenging, but
Yes.
it is in a later years, just like equity, it is very rewarding if you are
Rewarding. Yeah.
if you are remaining as a financial consultant, because lot of people actually start as a financial consultant, and with the first 3 years struggle, they tend to move out of this profession. But I think I believe this is a very good profession if you have if you can carve out, or if you can 3 4 years, if you can manage even with low returns on your time, on because you're putting your time as a consultant, then I
Yes.
think it is a good profession.
Yeah, I think it's critical for you to be good at your job, because that's when the trust is built up. When people know that you're good, then they don't care whether you're blind or not.
Sir, and this applies to every field.
Absolutely. No. So from a blindness point of view, I think if you want to pursue any profession, you have to be good at it. Then you definitely succeed. Yeah.
Is it matter?
And see, as much as we think that it requires a lot of number crunching and lot of this and that Excel work, it requires all of that. But at the same time, actually, when you are investing client portfolios, you are the most important thing that you're doing is you're managing emotions.
Emotions.
You're
Yeah.
managing, as I said, you're managing greed and fear. You as this thing, as spiritual leaders also say that if you follow Buddha or anyone, they would say that have a moderate kind of attitude, or have a moderate kind of a lifestyle. Don't worry about what is happening around you. Even if equity market is doing well, even if equity market is giving 100% return, if my equity allocation is 40%, I will and it suits my goal and suits my risk appetite, I will stick to that. I will not
stick on it. Yes.
Yeah, that is very important, and that clients don't understand. Once you make them understand, you are half of your work is done.
Yeah, half of the job is done by this thing.
Absolutely.
Is it matter totally blind or partially blind?
Doesn't matter, I think.
No.
Yeah.
Okay, I have a question. One question, Piyush. So say somebody like me, I mean, how do you think a person, I mean, should invest? I mean, should you invest in mutual funds, or should you trade with a demat account?
Okay.
How should you invest your money into the markets? I mean, would it be wiser to do it through mutual funds, or would it be wiser to buy stocks and trade the indexes?
See, if you obviously individual stocks have potential to outperform mutual funds, because the individual stocks, if you are at the right stock at the right time, you can even triple your money in say 2 years or 1 year. But the thing is, it comes with a lot of risk, and if you are willing to take that risk, and if you and risk should be calculated. If you are willing to take that calculated risk, and you are willing to devote that much time on research, and identifying and sticking to your investments irrespective of what is happening.
I understand that. So let's say that I don't have that kind of time. If I don't have that kind of time to research and go into the balance sheets of every company and all that stuff, so would you suggest that for an average person who doesn't have the time, mutual funds would be the best route?
Definitely, undoubtedly. I don't think people should take a plunge. For academic purpose, if someone wants to understand how to buy, sell stock, I can understand. But investing your hard-earned money without doing research, or with little research, because as they say, little knowledge is dangerous. I think with little research, you shouldn't put a lot of capital in direct equity.
Right.
You should settle with a little lower returns, but consistent good returns through equity mutual funds, or even through a part of your allocation should be there in your Nifty index funds also, which actually comes with a low cost. There is less of management fees, because there is no active fund manager. The cost is lower. So and there have been cases where a lot of fund managers have not able to beat even the index return. So a passive fund like an index fund or a Nifty fund should be there in your portfolio, in your equity mutual fund portfolio.
Okay.
Sir, excuse me, Piyush sir. I just want to understand, how flexible in terms of accessibility, in terms of financial related software. let's say SAP, all these things, right? Right now, my brother have been appeared for his CA final, okay, and hopefully, yes, you may clear it. So I just want to understand, like, how good or how accessible, or we need to do something else about it.
You're talking about the apps?
No, it's not apps. I'm talking about the for the entry. See, finance is all about entries, right? You need to show it, let's say balance sheet or whatsoever.
Okay,
right?
okay, okay.
So if you're managing a company, right? If you're auditing a company, something like that, you need to have a lot. You'll be having a knowledge, obviously, yes. But if you have to put in and show all the, ways in terms of particulars or proforma, set up or proforma, they may be using a certain software, right?
Right,
Do
right.
you think they are flexible enough for us to, work in finance related domain?
I'm not very sure about this because I won't say all softwares are and all these softwares are accessible. So there could be case where if person is working that way in a finance domain, the person might require assistance. But I think a lot of people are actually are into for such kind of jobs, the people who are visually impaired, and they are still able to manage it because 70-80% of the work is done say on Excel. 20-30% you might need some other platforms or other softwares to use. So it is possible to navigate, but obviously it is a little challenging.
Okay, thank you. Thank you, Piyush.
Hi, Piyush. This is Divya here. Can I ask a question?
Yeah, Divya. Right.
Yeah, Piyush. So I do my investments through Grow application. So do you think this is the right platform?
See, platform is not there's no problem with the platform. What allocation or what investments you are doing, it depends on that whether the investments are right or wrong. If you are able
Currently,
to manage
I am into mutual funds only.
Mutual funds, if you don't have any accessibility issues with the grow application, then I don't see any problem. Going and they have this thing, the direct mutual funds they invest in. So if you are comfortable in investing yourself without need of a distributor or an advisor, then you can stick to grow. There is no problem with that.
Okay, so recently actually I was facing a problem, if I can ask you about that.
Or we can take if it's something only relevant to you, then we can take it one-to-one. I will leave my contact details shortly. Then we can connect one-to-one.
Yeah, that would be very helpful. Thank you.
Yeah, thanks.
Piyush, we
Hello.
have somebody. We have Talha who says, "What are the best accessible apps for managing shared stock?"
Can you please tell us?
Yeah, so I use Motilal Oswal, which is very accessible. I don't face any accessibility challenge with Motilal Oswal. Then there are other apps which I personally haven't I've used but not used a lot, not used extensively, like Zerodha and Upstocks. These are also somewhat accessible. So all these three apps for individual stocks investment is more or less accessible. At least 90% is accessible.
I have used Zerodha Kite. That is their app, but I don't find that very much accessible. So
but people tell me, I've also used that. I also was not very comfortable navigating it. I was able to do most of the things, but not all of the things. But people tell me in the stock market group, that VI group, that Zerodha is accessible. So that's why I thought. I stopped using Zerodha about 4 years back.
I don't think it's that accessible, but yeah. But anyway.
But angel broking is accessible.
Angel is another one that is accessible.
What
Angel broking.
Okay.
Yes.
Hello, sir.
Yes.
I'm Sumant.
Yes, Sumant.
Sir, actually, I'm also interested in trading also. So how can I learn this candlesticks, patterns, charts, and all, sir? Because since I'm a visually impaired, it can be there are no proper aids to be read out.
Yes.
So what's the thing? What's the software or anything which can sort this problem out?
Chart, we can take it outside, like, because it is somewhat completely different with our subject. Our subject is more on investments, and that is actually about trading. So we can take it up one-to-one, that regarding charts and all.
Okay.
Because it might not be relevant to others.
Okay, sir. Sir, one more thing you discussed about the WhatsApp group of this visually impaired, this stock market for VIs.
Yes.
Even I am interested to join that group, sir.
Okay, well, you can. I will leave my contact details. Can you make a note of it, or George sir, can you share my contact details? Is it possible to share?
Yeah. Do we have Suman's number, Shabnam or Keto?
Suman's number that Keto would be able to say, but if he has registered, definitely we'll have his number.
Hello, sir. Is it possible to share that his service number to everyone so that we can contact him?
Piyush, we can put your number here on the chat box.
Oh, I think, ma'am, can you email us because they have registered through email?
Yes, if you have registered, we will send it to you on emails. But in case some of you have just joined this link through a friend or somebody without registering, then we may not have your details. But if you have registered, we will have your details.
Yes, ma'am. We have registered through email.
we have
Mail
registered.
it to us. Mail it.
Okay, we will email it to you.
Piyush, one request. You know this the WhatsApp group of blind stock traders or whatever.
Yes, stock market for VI. Yes.
Yeah, if you can share that whom to contact with us, because we keep getting calls from people. There could be people who might be interested in being a stockbroker or in that domain. So we could you know it is one
You
way
want
is
me to connect you to the admin or someone?
or is it okay if we actually direct them to you?
Yes, that's okay. That's okay.
That's okay with you. Okay.
Yes.
Fine.
George, what I want to say that I didn't register. I just got the link and I came here.
Who's this?
This is Ravindra.
Ravindra, why don't you put your name and number on the chat box, and one of my colleagues will note it down.
Okay. Sure.
Piyush sir, I have a question. It's Krit from Kashmir.
Yes.
Yes. Sir, you know that our elder generation, they were investing only in debt, like LIC policies and FDs and all that.
Yes.
So there was not much awareness or much risk taking of equity funds. So is it okay for a person who is just investing in a debt and not using the equity or market? So is it okay, or we can say it is foolishness? What we can we say?
Okay. To sorry, your voice was breaking in between. It is okay to what?
It's okay that a person is just investing in debts like FDs, RDs, and LIC policies. Okay, because you know that our elder generation.
But the only problem is, I will tell you the problem with that. See, these are all opinions. Is stock market risky? Stock market is not risky. Is it safe to invest in FD? Not safe to invest in FD. But see, believe in facts and figures. Don't believe in opinions, and don't think about these opinions. So what does the fact say?
What my question is, sir, that many people told that such person that you are foolish, that you are just investing in debts because
that's what I said.
because you are getting the 6%.
You are foolish to invest in debt.
You are getting the 6% fixed amount, and the market, you know, money value is
even with debt you can create wealth. You can create wealth with debt. You can create wealth, but the process will be very slow, and it will be a very long-term process. You can create wealth, but equity, your wealth will be definitely more in the long term. But if you are not willing to take that risk,
they totally deny that debt. They said that if you are earning some money, but at that point of time, or over a long period of time, the buying power of the money is changed.
Yes.
So it's equal. You are not gaining anything.
So what they are saying is essentially that what debt does, debt is not investment.
Yes.
Debt is savings.
Okay.
You are just saving your money, because what is happening is approximately debt is giving you 5-6% return, 7% at best. Then what's happening is inflation is also almost that much, 6-7%.
Yes.
So every year the prices of things are rising by the same proportion. So by debt, investing in debt, you are just keeping that money. You are not growing that money.
Yes, it's equal.
By investing in equity, you grow that money.
Yes.
And why you need the balance? Just to minimize risk.
Okay.
Hello, sir. So, Manikanta here. Actually, I lost my connection. since 10 minutes. Can I get a short summary? What happened?
We will share the video recordings with you. You can go through this session all over again since we are running out of time.
Okay.
Yeah, you should go through the presentation. I think a lot of things were covered, so difficult to summarize in a few words.
We will share the recordings with you. Don't worry.
Can you hear me?
Yes.
Yeah. So there are a number of names and numbers shared in the chat box.
George, I'm noting them down. Don't worry.
Okay.
Yes.
So I'd like to thank all the participants for having signed up and taken part in this session. And we have sessions on different topics as we go along, one every month. So if your numbers are with us, we will keep you informed. The other thing I wanted to so thank you very much for participating, and Piyush, thank you for your time, and I thought this was a very exciting session.
Yes.
I think it gave us a lot of understanding of the domain, and I think it probably also would have motivated people, some people to maybe get into the sector and try their hand in the profession. And I think you simplified it and you demystified the entire thing. So, normally when it comes to financial things, I'm not interested, but I was kind of paying attention every second,
Yeah, right.
So it was very interestingly put, and thank you very much for that.
So should I speak out my contact details if someone wants to connect?
Yes,
yeah, you could do that. Yeah.
If everyone is ready, then I'll start speaking with my number and email ID.
Yeah.
And Shabnam would request you to note it down on the chat bar as well.
Yes.
Yeah. So my contact number is 97-489-763-763.
Okay.
Yeah, 71.
71.
Yes.
Yeah, 76371.
Yes.
97-489. So 97489-76371.
That's correct. And my email ID is
9748997.
Yeah.
97489
76371.
76371.
I've put it on the chat, and email is
Piyush, Piyush.
Yes.
979797.
_ RAKH.
Okay.
ECHA.
RAKH.
EC, E for England, C for Calcutta.
Okay. HA.
@live.com. LIVE. So if someone wants to connect.
What is your surname, Piyush?
Rakecha.
Yes.
What is your surname?
Rakecha.
Rakheja.
No, it's CHA at the end. RAKHECHA.
Yes, that's right. Okay. Yeah. So if you want to connect with me to understand something that we have discussed, or some other thing that you want to discuss on personal finance, or if you want me to manage your investments or give you advice on something, that can be done. You can connect with me anytime.
So